Welcome to Lawgical, the UAE's first and still the only regular legal podcast. My name's Tim Elliott. I'm with the managing partner of the Dubai-based legal firm HPL Yamalova and Plethka here in Dubai, and it is Ludmila Yamalova I'm with. Nice to see you.
Good to be here with you, Tim.
Now, in this episode of Lawgical, we're going to be talking corporate tax law once again. We've talked about this very recently. It's just come into effect, Ludmila, on June the 1st. And we recorded kind of an introductory look at the new law then. Now, as we record this, we're a few weeks on. So I guess it's good to start with a reminder of where we are, the ins and outs of UAE corporate tax law right now.
Well, where we are is that as of June 1st of 2023, now the UAE corporate tax is in effect. Mm-hmm. So now we have corporate tax.
Yep.
And before we just had draft laws, we had expected laws, and we had the actual law, but it had not really come into effect until June 1st. So it is now in effect. It does not yet apply to everyone. It only applies to all those businesses whose financial year starts in June. For all the other ones whose financial year matches the calendar year, they will be subject to this law as of January 2024. But the law is final. It's here. Not only that, the law continues to kind of like an amoeba. It keeps growing, and it's like a spider web that after the original sort of corporate tax law was introduced. There have been a number of decrees, resolutions, regulations, executive orders, and clarifications, and so forth. So this little sort of organism continues to grow and expand. So it's certainly not going away because I have to tell you, when we first heard about corporate tax law being potentially introduced, we were all in denial. And then when it was finally formally at least announced that it will be coming, we're like, it's not really going to. And then when it was actually already published, we said, okay, yeah, but they will delay it. Well, it ain't so. It's here, and it's here to stay. So, and not only that, it truly is. It's a layering on, developing with multitude of layers, and it's obviously going to be a very complex body of law. But it is not going anywhere.
This is true. Are you anywhere near acceptance yet, or are you just out of denial? Are you how are you doing?
I am a little bit still in denial. Oh yes, it's a kind of willful ignorance. As far as from my business, our fiscal year is calendar year, so we're not yet sort of formally subject to it now, but. Certainly very aware of it based on what we do as an industry. 1, 2, for many of our clients, and 3, to be honest with you, since I'm a U.S. citizen, since I've been in the UAE, and U.S. citizens a very privileged breed. We have to pay taxes, U.S. taxes, no matter where we are and no matter where we live, where we work. So as long as I've been in the UAE, I've had to declare and pay taxes to the U.S. Always. So I haven't had a break. So it's not like I'm not familiar with the concept, or the concept is long forgotten, and it's always sort of present because I've been doing my taxes to the U.S. Authorities. So we know, and we're prepared. And then to add to that, when the VAT was introduced as a business, and obviously for all of our clients, this was kind of like a soft introduction or entryway into the tax world. Most business, at least not most businesses, but a lot of businesses have obviously now kind of adapted in terms of just the bookkeeping practices, the auditing and the accounting practices, and just issuing invoices and the corresponding kind of receipts. At least it's now lingo now, because until 2018 it wasn't. It was a completely foreign language.
You know, it's so interesting that, because wherever you go in the world, it is always the T word. It's a dirty word, isn't it? Tax. It's something you don't mention. That's going under the breath.
We were very proud for a long time to not have kind of a dirty word in our vocabulary in the UAE, but we have now been, it's seeped into this world as well.
You made an interesting point just now, actually. The fact that not everyone needs to register right now. You kind of said, you're not subject right at this moment. And that's because it depends on your tax year, isn't it, to start with?
Correct. So kind of as a starting point, and we've dedicated previous podcasts on this topic, is any kind of business ultimately will have to register for with FTA being the Federal Tax Authority, and would have to do the tax returns on the annual basis. But not every business will have to actually pay tax. So it only if you meet the threshold, you'll be actually subject to paying the tax. But in terms of registering with the authorities, we're all required to do so. But for the purposes of perhaps gradual implementation of this law, it applies for the time being. It applies to all those businesses that start the fiscal year in June. So those businesses are now, they should by now have register with FTA. They don't really need to do anything other than register with FTA for the time being, because they don't have to pay tax until a year after. But they should register. A business like ours and all the other businesses whose fiscal year is calendar year, we have the option of registering between now and January, but we're not required to do so. Obviously, the sooner we do it, the more comfortable we'll be by the time that it's actually obligatory for us to have that registration, because the whole sort of the interface and the services are evolving before our eyes. So it's actually not a bad thing to kind of be registered early on, so you can learn and evolve along with the system.
I mean, that's about the extent of my knowledge. And my knowledge is based on the podcast we did 3 weeks ago, aside from the fact that the rate is 9%. Is there anything new? Have you learned anything in the last 3 weeks? Any changes? Any additions?
Well, there are many, and I just think it's my head starts spinning when I yes, and I think it will not continue. It will not stop to spin for probably ever, because this is as is typical of so many other tax laws in other countries. There's always something's always evolving, something changing, something developing in a tax world. So I assume it's going to be a very similar pattern here. For the time being, what was perhaps what we wanted to discuss and focus on today in particular is regarding the application of this corporate tax, as you said, 9%, to free zones. And so for all those who are familiar with the UAE and our kind of business environment here, we have what's called the mainland. And that's these are companies that are set up on the mainland and under the authority of what's called the Department of Economic Development, or DED. And then we have free zones, and every emirate has its own free zones. And within the free zones, and there are kind of specific regulations that apply to companies. So this is for companies' purposes. Historically, a free zone, there were certain benefits to being within the free zone, one of which, and a lot of these benefits have been kind of fading over the years because of other changes in the law. So one of the benefits was, for example, if you set up in the free zone, is that you do not need to have an Emirati sponsor or a partner. So that was one of the big benefits. Well, now, for the most part, you don't really need that kind of a partner, even on the mainland, so that benefit is of less relevance now. However, one of the other benefits that was advertised for free zones is that tax-free. So for 50 years. And, well, now the big question when the law was introduced for all of those businesses that are based in free zones or outside, for that matter, or they were wondering, okay, well, free zones, because it says tax-free. So does that mean we're going to be exempt? We don't have to, as a free zone company, we don't have to pay the tax because it says tax-free. So that is one big question that's been on many people's minds, and now we have some more clarity on what that means. And in short, the free zones, and just to kind of highlight once again, will have to register with FTA, because the law applies to all types of businesses, irrespective of how much they make per year and where they're located or what the type of business. So they all have to register with FTA. They'll all have to do tax return, including free zones. And with regards to whether free zones have to pay tax, it depends. So, in other words, free zone companies located in the free zone, just because it's called a free zone, and under the terms and conditions of almost basically every free zone, this is this tax-free for 50 years. It still depends for the purpose of corporate law.
Okay.
Businesses may still have to pay 9%.
Well, you know what my question is going to be. What does it depend on?
Yes. So it depends on the type of business and perhaps the location of your clients, your customer base, and ultimately your revenue stream, the source of your revenue stream. So, for example, and this perhaps is how the authorities have been able to combine the two concepts of free zone and this federal corporate law, corporate tax law. So that, because you can imagine if free zones were completely exempt from corporate tax, you would probably have very few mainland businesses, especially now that you're not required to have a local partner anymore. You can basically move to a free zone very easily. I guess this to straddle that potential kind of conflict or discrepancies in the laws. So what the authorities have ultimately decided, and for the time being, this perhaps will evolve in other ways, but if you're inside a free zone as a business, you don't need to pay. It's not that you don't need to pay. It's just you're not exempt. You are just you are subject to a different tax rate. And the tax rate is 0%, right, but on certain kind of income only. So if you're a business inside a free zone, anything you generate within this free zone is 0 rated. So you're not exempt. It's 0 rated income. So let's say if I'm a business inside the free zone, we can call it the MCC, which is kind of where we are. And all my income is from my clients here. Let's say I'm a restaurant. I'm a restaurant in the DMCC or in TCOM. Since I'm inside the free zone, then all my income that is generated within the free zone is subject to 0%. So let's say as a business, I also have lots of clients in the US. And so any kind of income that comes from the US is also 0 rated. But any income that's generated from outside of free zones, there's 3 exceptions. So if it's whatever income is generated within my free zone is 0 rated, whatever income is generated from outside of the UAE is 0 rated, and whatever income is generated from other free zones is also 0 rated. So let's say I'm sitting in DMCC and I do work with TCOM, with Silicon Oasis, DFC, JAFSA. So any kind of income between the free zones is also 0 rated.
Let me just simplify this for my non-legal brain for a second. You're a restaurant and you're in the DMCC free zone. Any revenue generated in your restaurant, people come there and they pay their bill, that's 0 rated. If you do outside catering to another free zone, 0 rated. If you do outside catering in another country, 0 rated. However, am I to understand that if I were to do outside catering in Dubai, outside of a free zone on the mainland, no longer 0 rated?
Great example.
Okay.
Excellent example, and it's great demonstration, because you think even a business that is not professional services, because professional services it's much more fluid in terms of where the income is generated. But if a stationary business like a restaurant, you'd think, okay, all of it, the income should be 0 rated if they're in the free zone. But as you rightfully said, in the UAE in particular, deliveries are very common for all restaurants.
Well, that's a really interesting point, because that's another aspect, isn't it? As soon as you deliver outside of the free zone, all of a sudden, okay.
Exactly.
Yeah.
And I will tell you there's even more. So that's just for businesses that actually deal with material or tangible goods, such as restaurants. Right. And what about professional services? So for example, let's take a law firm, us. For us, let's say you're my client, right? And you're my client, you're a company based in JAFSA. So any kind of income that we do for you and for your business in JAFSA is 0 rated. However, same client, you have a property that you own on the Palm. Any of my services related to that property, to that interest of yours that's outside of free zone, that's the mainland, will be subject to 9%.
Even if the client is, in theory, located inside a free zone, the asset outside of the free zone.
Exactly. So
Right.
it's not just the location of the client, it's basically where the revenue stream comes from, the sort of the source of the revenue stream. So because in that case, you're paying me for the services that relate to your asset outside the free zone on the mainland, and that's subject to 9%.
Keeping track of that is going to be that's so essentially your audited reports are now set to be really, really scrutinized. You've got to be really on top of this.
Absolutely. And so you can imagine what this will do to a lot of businesses in terms of just administration, operations, and cost, compliance costs, but also, I guess, what it will do to the accounting and the auditing industry. There's I would expect more schools to open and more accountants and bookkeepers to flood into the UAE, because it's certainly businesses will need this help, because as you just identified, there's so many different layers. You could be, as a business, you could have the same client could be in different free zones. So the services you're providing could be different free zones. It could be outside of the UAE, it could be mainland. So just keeping all that documented and monitored, I mean, it's not going to be simple.
And the thing is with this is in the free zones, there are many major global corporations, and to many of them, a new procedure isn't such a big deal. But by the same token, there are lots and lots of small, medium enterprises operating from these free zones here in the UAE, and for them, this will be a big deal.
Absolutely. And we've seen that with the introduction of VAT. And so that's why, as I mentioned earlier, I think that was a very kind of a gentle way perhaps to ease businesses in the UAE into the corporate, the new world of the corporate of tax. Because until VAT was introduced, most businesses, a lot of the small mom and pop businesses and boutiques and grocery stores and cafes and restaurants, they didn't even have, all the accounting was done by hand, because if you don't have to pay taxes, you don't have to disclose or make reports to any specific authority. How you keep your books is completely your business. So that's why a lot of businesses just literally did it by hand, and a lot of receipts. I remember, I'm not that old, but I remember the majority of my time here, receipts were handwritten, and then so when VAT was introduced, that was one of the requirements under the VAT law, was that everything, all the invoices, all the receipts had to be of a specific format and ultimately electronically generated. So hopefully by now the businesses have had a little bit of time to kind of ease into it and adopt some bookkeeping and accounting practices that will make it easier for them to embrace the new reality and the new level of reporting requirements. But it's going to be complex for sure.
Well, it is. There's something else as well. The two of the UAE's free zones, the DIFC, Dubai International Financial Centre, and the Abu Dhabi General Market, the ADGM, are in many ways independent legal jurisdictions. That's kind of historically the legacy. I think it's fair to say. They have their own laws, their own courts. But for the purposes of UAE corporate tax, the DIFC and the AGM are subject to federal law, just like the other free zones now.
Exactly. And that's another big point in this, is something that we have perhaps less but learned, but sort of clarified and solidified further in our minds recently. But before I jump into that, I did want to also make one comment, because there's a lot of free zone, let's say outside of, as we mentioned earlier, the UAE has many free zones, and every emirate has its own free zones. Dubai has the greatest number of free zones, but in addition to your general free zones, we have these specific free zones like the DFC and the DGM. We'll come back to them shortly. But in terms of the regular free zones, a lot of foreign interest companies, businesses, individuals have set up free zone companies around the world, around the UAE, for their global operations, which basically means they have a base here, a legal base. They have, let's call it a JAFSA company, or a Silicon Oasis company, a DWC company, or a DMCC company. So any one of these free zone companies. They have the company, but all of their income is generated outside of the UAE. Yep. So therefore, by law, by at least perhaps the speculation, the implication would be that They're within the free zone, and all of the income is generated from outside of the UAE. Therefore, they'll be zero rated. However, there is, and this is kind of where a number of laws going to come into play together. There's an additional sort of set of laws, and we've talked about it in previous podcasts, called the ESR, which is Economic Substance Requirement. And so, however, in order to benefit, and this is kind of where this particular aspect of the corporate tax law comes in with the economic substance requirement, and that is in order for those kinds of businesses, or for businesses to benefit from the 0% rate, there's an additional requirement. So these are only free zone businesses which meet the following requirements can benefit from the 0% tax rate. Otherwise, they'll be 9%. And those requirements are, first of all, it has to be derived from the qualifying income. The qualifying income being, for example, either from other free zones or from outside of the UAE. That's called the qualifying income.
Right.
But second of all, this is really important. The free zone company or persons, they must maintain what's called adequate substance in the UAE and conduct their main sort of core activities, income generating activities. And they have to maintain their assets and employees and expenditures in this basically company, this free zone company.
Right, but what's adequate substance?
So it's a fairly complicated area of law, but basically it has to have like the managers of the company. They have to be based in the UAE. They have X number of board meetings and quarterly meetings have to take place in the UAE. The decision making has to take place in the UAE. The senior management have to be in the UAE. So they have to have, depending on the type of businesses, they have to have X number of employees, and these employees have to be under the company's residence, and they have to be based in the UAE. So in other words, these sort of shell companies, which was previously, I guess that was one of the prolific industries for a lot of the free zones. Is there a lot of shell? I don't want to call them sort of shell, but there were companies that were set up in all the free zones, and they were being used for purposes of their own tax optimization or tax reporting in their respective countries for purposes of optimizing tax. So they would use this free zone, the UAE free zone, for that purpose. So now that option is no longer for those businesses who have these purely shell companies. For just that reason alone, that's no longer going to work. They will have to still pay 9%. So unless they actually, and if they don't want to pay the 9%, then they need to make sure that this business is a substantive business. So in other words, if I have a company in the Netherlands, and I just have a free zone entity here, I can no longer just run all my income through the DMCC company for purposes of being zero rated, but I have to actually have employees here. I have to have an office here, and this is one of the requirements as well. Will be just the physical office, because a lot of these sort of shell companies don't necessarily have a physical office. It's kind of flexi desk option. So under this, and this is where I'm saying the ESR, the economic substance requirements that we've done a podcast on, has a very specific sort of list of the requirements depending on the business, how many employees, how many meetings, management, decision making, how much of that substance has to take place in the UAE. But that's where the two kind of merge together, the corporate law and the economic substance law, and that basically, if a business is based in a free zone in the UAE and wants to benefit from the 0% tax rate, it must have its substance here in the UAE and not just use this kind of as a shell entity for purposes of tax optimization.
Okay, so adequate substance is kind of proportionally linked to operational activity, I suppose.
Exactly,
in
yes.
one way of putting it. Let's just head back, to the DIFC and the ADGM.
But there's a few other things for these same free zone companies.
I had the feeling there was.
Yes. So also, some free zone companies or some businesses actually may want to opt for 9%. So even if they don't, they have businesses elsewhere, so they may actually want inside the free zone, and they may otherwise have a qualifying income that would be subject to a 0%. They can actually opt in for 9%. So they can opt in to pay 9%. Why? Because it may be that in another country where they have a business, the tax rate is much higher.
Sure.
And so, and if there's these, and if there's an agreement between the two countries for double the taxation, for example, so they prefer to pay a lower tax here in the UAE than a higher tax, let's say, in Europe. So in other words, businesses even who have qualifying income that otherwise would qualify them to 0% tax rate can actually opt in to paying 9%, so that they can opt for the 9% and not the higher rate that they would be subject in a different jurisdiction.
So, I mean, let me just boil this down once again for my very simple non-legal brain. You effectively, through introducing tax, you not chase, that's the wrong word, but you discourage the businesses that you don't want. And by the same token, other businesses may opt in, and you encourage the businesses that you do want.
Oh, well, and this is perhaps the evolution of every kind of economy, is that the UAE has over the years become a lot more of an evolved and stable and sort of sustainable economy. And it's by virtue of these new regulations and your sort of the businesses that are being set up here are becoming a more of a real businesses and sort of sustainable businesses. And that's to your point. And these are the kind of ultimately these are the businesses that will benefit the economy in the long run, the economy and society, right? Because they're the ones who generate businesses, they're the ones who generate employment, they're the ones who to rent spaces and hire people and so on and so forth. So these are the kind of businesses that the country actually would benefit from in the long run more. So so as part of the evolution of these legislative reforms, this is what is happening, that the businesses that are being set up here or that still remain are actual real businesses.
It's all starting to fall into place.
Yes. So there's one more comment, and this is also important to make sure in this part of the kind of the compliance and the tax optimization is any kind of multinational companies, for example, that want to potentially benefit from the zero rated. They need to make sure that they adhere to what's called the arm's length principles and maintain adequate sort of transfer pricing standards and documentation, meaning that if you have a big company and you have multiple entities, right? And so you can what you can do is you can set up different sort of free zone entities and say, oh yeah, this free zone basically is zero rated. That one is zero rated because they're kind of separate legal entity. But in order to benefit from these sort of zero rated, they actually have to. The transactions themselves have to be kind of arm's lengths, and they're conducted at arm's lengths. And so they're in order to benefit from these potential sort of exemptions in the law. So again, you cannot use this or abuse it or misuse it as was the case before and in many other countries where businesses always seek out other more beneficial jurisdictions to set up in order to basically, I don't want to call avoid paying tax or try to optimize their tax obligations. And so just kind of to wrap this up, just in terms of the legal foundation. And so these kind of clarifications of the free zones, in particular, they were issued by virtue of the Cabinet Decision Number 55 of 2023 regarding the qualifying income of qualifying free zone entities, and in particular Articles 3 and 7. And obviously that's in addition to the Federal Decree Law number 47, 2022, which is the Corporate Tax Law. And the specific articles there, like 1834 and 55, that kind of deal with or set the foundation of the base for what's to come next. And so on the back of that substantive law, these new cabinet decisions that came out recently, just this year. And so that's basically where these nuances that we've just discussed are embedded and further detailed.
I think that pretty much sums it up. But I've got a feeling this is a topic we're going to come back to.
As far as the free zones are concerned, the ordinary free zones, but we still have the DIFC and ADGM free zones.
Okay, so we do. Well,
cover, yes.
A few words on that, I think, are necessary.
Yes, so ADGM and DIFC, these are the two sort of very special free zones in the UAE. So DIFC stands for the Dubai International Financial Center Free Zone, and ADGM stands for Abu Dhabi Global Market. So two separate free zones in two different Emirates, one in Dubai, one in Abu Dhabi. And these free zones are not just your free zones, your typical free zones. They're also independent judicial judicial zones, and they have their own laws. Yep. And interestingly enough, so they're independent jurisdictions, and they have their own not just laws but their own courts. So, for example, the DIFC has its own common law jurisdiction. versus civil law in the rest of the UAE, same with ADGM. Their laws are based on English laws, sort of on the English legal practice, same with ADGM. And even all the practice, all the laws are drafted in English, and the main language is English, not Arabic, as is the case in the rest of the UAE, including other free zones. And they have their own courts. And the courts are, for the most part, represented by very senior judges that are English trained judges, and it's all English speaking court. So these two free zones are not just your typical free zones, but they're also independent jurisdictions, completely independent jurisdictions. And for the most part, as their laws, the kind of law in themselves. So the federal laws don't necessarily apply to these two free zones, apart from a few laws like, let's say, the criminal law. So that's why we've had a few questions recently from clients. So we want to go and set up in DFC or ADGM. We want to move our business either from the mainland or the free zone to one of these because we don't want to have to pay tax, or we just want to maybe optimize our tax obligations. Yeah. And so we're thinking of moving to DFC or ADGM. Thinking that because DFC and ADGM have their own taxes, or their own laws, that this corporate tax law will not apply there. And for the most part, with regards to most other laws, that is the case. For example, the DFC and the ADGM have their own employment laws, and they have their own companies laws, they have their own corporate laws, their own contracts laws, and so on and so forth. But as far as the corporate tax, the UAE Corporate Tax Law, this corporate tax law applies to all to the entire country, to all of the companies in all of the free zones, irrespective of what type of free zones they are. In other words, this particular corporate tax law applies equally to ADGM and the DIFC. But in that case, they are treated, ADGM and DIFC, treated the same way as any other free zone for purposes of corporate tax law under the 0% rated income, as we discussed earlier. So in other words, whether you're based in the DIFC or the DMCC or TCOM or ADGM, your sort of reporting tax obligations will be the same. But the tax, certainly you will still have to register with the authorities, with FTA. You'll have to submit your income, and you will be able to, some of your income could be zero rated, qualifying income, but the other income that deals with the mainland of the UAE or sourced from the mainland of the UAE will still be subject to 9%.
There's a lot more to talk about here, I think. We'll come back to UAE Corporate Tax Law, no doubt, and over the course of the next few days, weeks, months, I have a feeling. That is another edition of Lawgical, Corporate Tax Law, an update as ever. Thank you for watching, listening, or both, and thanks to our legal expert, the managing partner here at Yamalova and Plethka, Ludmila Yamalova. I feel it's a lot clearer.
Yes, you look a lot more enlightened.
Thank you. I appreciate you sharing your knowledge again. Find us at LYLAW, social media, Facebook, Instagram, TikTok, LinkedIn. All the podcasts that we do are free at lylawyers.com and most other podcast platforms. If you'd like your legal question answered in an episode of Lawgical, or you want to talk to a qualified UAE experienced legal professional, click contact at lylawyers.com.